Hi everyone, thanks for tuning in today, our Facebook Live, and I'm going to talk all about bucket companies and how they're going to be used to cap your tax at no more than 28.5% for a business owner. And I'm going to demonstrate on the whiteboard also how that can be used for your business effectively, and who can switch over or establish a bucket company before 30 June in order for that to happen. So hi there, thanks for joining in. I'm going to show first I'm going to go through quickly the three structures, which is sole trader, company and trust, just to give you a quick background of what the differences are and the pros and cons, and then I'll demonstrate how your current structure can be used to distribute to a bucket company and therefore cap it the profits tax rate at 28.5% for a small company under 2 mil, and the government is thinking of reducing that company tax rate further, and how you can use that profits distributed to a bucket company to invest in shares or property. Okay, so first, as I promised, last week in Facebook Live I covered the different structures in detail, but for now we have again the sole trader, the company and the trust. So 99% of the business owners who start a business will start with one of these lovely structures here, and they're not all the same. Okay, so a lot of people will think that this is not an important step, but I see this is the most important step after you think of a business idea. Okay, so you ask yourself, what is the best structure for me? Now, to help my clients determine what is the best structure for them, we ask them two things. One, we ask them how much tax you want to pay. Okay, so we call it tax effectiveness. And secondly, asset protection. So today, this is what I would be in one of my business structure meetings, which I would be highly paid for, to go through with a new business code. But today I'm going to share with you a bit of insight on what I cover, and you get to enjoy if you have the right structure. So sole trader, the tax effectiveness is not tax effective, because the maximum tax rate could go up to 49% for an individual if you earn over 180,000. And certainly there's no asset protection. So if you have a home under your name and you also have a business trading under your name, you're like a beach whale. So they can a potential creditor or customer who sues you can also access and get your home as well. So that's a big cross for both. So a lot of startups unfortunately start as a sole trader because first it's simple, and it's cheap to start. But in the end of the day, if you have $1 million house and you are sued for your business, you are putting up the cost is $1 million, not so cheap, right? Okay, so let's look at what the other structures can do. A company, the flat tax rate is 28.5% at the moment for small businesses, which is normally less than 2 million turnover. For asset protection, yes, a company is Pty Ltd Limited, which means that the risk of a business, if being sued, then it would be limited to the assets and liabilities of that company. And unless of course you do something on purpose or trade insolvent on purpose, then that protection is lifted and is no longer effective. So for now, we just assume that if you had a home and you've been sued, and then the risk of the company is contained in the company, and you are protected, and you're not losing all your assets. The trust, again, the family trust, we call it, is the most. We have two types of trusts here. The family trust is when you run a business with normally a mum and dad business, or brother and sister, so in the family. But the unit trust is with friends. So you can have it with friends. Okay? So this is nil tax, and I'll explain further, and this is asset protected. So what this means is that if you operate your business in this one, you get to distribute the profits out to your beneficiaries, because the trust never keeps the profits in the trust, but it gets distributed and taxed at the level of the beneficiary. So let's put an example. So if you had a let's say income of a profit of 200,000, okay, so that's profit. You did really well after all deductions. There's a profit for the business of 200. Now, if you were to trade it as a sole trader, the tax amount on that after calculation for sole trader would be, let's say, 200. So sole trader would be about $70,000. Okay, for the company would be at the flat rate 28, so about $57,000. So just 200 times 28.5, and the discretionary trust or the unit trust will be depends. The tax will be depends, because if you have more brothers and sisters, or as I covered last week, more beneficiaries, then you can distribute the tax to your beneficiaries, and if they don't have any income, then up to 18,000 is nil tax. Okay, so that's the background of the different structures, if you missed that last week. So now I'm going to go through how does a bucket company cap the tax for a potentially more profitable business. Normally above 200,000 profit, we start looking at bucket companies, or when you don't have any individual beneficiaries in your trust to distribute, or they're all high income, then we can potentially look at the bucket company to cap the tax. The reason why I say more than 200 or at least 150 tax is because, as you can see, the company tax rate is already 28.5. At 100k, an individual pays about sole individual pays about 25,000 tax. So it's still less than the company tax rate, which is 28,500. But if you had 200,000 in your profit and you had no one else to distribute, say all your beneficiaries was already distributed, then let's say, and it was just yourself, so just say individual one equals 100k or 200k, sorry. So the tax on the individual, as I said, the tax on the 200k was 70,000 roughly. Now, if you had a trust as a business, if you use a trust as a business structure, instead of the individual, you can establish called a bucket company. Okay. So a bucket company will receive this profit, 200k, at the tax rate of the company rate, and therefore pay tax of 57,000 tax. Now that's a huge saving of 13,000 tax. Okay, saving, and that's per year. So if the more profits you make in your business, obviously that saving will go up. Okay. Now that's amazing saving. So if say it's 400, it will go up more than double. Now let me draw that. So how it works now. So if you already have a trust or unit trust that you use for your business, so how you will do that, we would help you is, so you already have a trust for your business. So you only can do this if you have a trust set up for your business. If you don't have a trust, meaning if you have a sole trader or a company right now for your business, we can help you convert to a trust before 30 June. Yeah. So if you already have a trust, then the easy way to do it is you can obviously have individual beneficiaries. That could be yourself, wife or kids. And then we can have this bucket company set up for you before and receive the profits. So say, let's use our example 200. So say we can distribute some to the individual, 18k, which is nil tax, and then we can distribute the balance, which is let's say 180. Let's do 20,000. To make it simple, keep it simple. And 180k tax. So whatever the tax on that, so 180 capped at, let's see, 28. Let's say 50,000. So that's probably that's our estimate. Okay. So as you can see, that's probably the better result than even the one before I said give all to the bucket company. So 50k. So what you can use with this 180k tax is that you can then buy investment property as a, use a deposit to buy investment property or shares. But this is your bucket. So to keep it separate from your trading business. Yeah. So this is used to buy income producing assets. So that's how you do it. Now, in order for this to be effective, you need to set this up before 30 June and have it ready to go to receive the distribution from your trading trust. Okay. And that means that this bucket company, regardless if it's 200 or 1 million, it's always going to pay maximum tax of 28.5%. That's the tax rate. Instead of going up to 49% as an individual beneficiary, and that's why that's how bucket company works. Right, so I hope you got a lot of information today and start thinking whether your structure currently is the best structure, and possibly if you need any help or assistance in reviewing, if that's the case, then get in touch with our team, because you do have a small window of opportunity, another 5 weeks, to get your structure in order and to make sure that you are not paying extra thousands of tax. That is not necessary. Well, thank you for tuning in, and I look forward to tuning in again next Wednesday with you Facebook Live in a different topic. Bye for now.